Hi, I'm Dan Dicker. I'm a senior contributor here at The Street. I'm with the co-portfolio manager of Action Alerts, Stephanie Link. And Stephanie, I wanted to talk because we're two traders in varying sectors, but we're two traders.
Sure.
And this government shutdown, we don't have a lot of the data points that we normally have. We won't get a jobs report on Friday. We won't get a number on that. And if it goes on long enough, we won't get a manufacturer's index. Those things won't be updated. So tell me, how do you trade a market when you don't have these data points to roll around?
It's really hard, right? We've raised cash. We started raising cash in August, and we are now up to one of the highest percentages in the portfolio at 11%. We normally run 3 to 4%. So 11% is a big number for us. But I will say this. We have gotten pockets of economic data. We got the ISM numbers.
Right.
We got the new order numbers
Right.
within the ISM
Right.
Earlier in the week.
Because those aren't government-driven numbers, so we don't have to rely on the government to give them to us.
And they're a little more accurate, I might add.
They probably are.
We did get the ADP numbers, and within that, I was encouraged that construction actually saw better than expected numbers and a pickup from the last couple of months. But certainly, we want to get more data to confirm if we in fact are seeing a recovery. What I think is going to be important: earnings are going to take center stage
exactly.
next week, October 8th. Alcoa reports, and I know no one really wants to own Alcoa, the stock. I would say that their conference calls are really very helpful because they have a number of different end markets that they sell into, so they can give you the demand trends, both, again, end market-wise and then also geographically.
So you think some of these data points being out of the way, we focus again on earnings?
Yeah.
I kind of look at it sort of as a very short-term kind of way to play the technicals. Normally, I don't really care much about charts. I do, but I don't really focus on them. But here, when you have a government shutdown, which might cause 1% or 1.5% in GDP losses over the next quarter, you can take sort of a negative bias, look for some negative setups in some charts, particularly in those government kind of sensitive centers like healthcare or aerospace, and look for a little bit of a negative technical kind of setup, and then have a couple short in here, but quick plays, in and out, the kind of technical plays when you don't have those data points.
What's kind of interesting to me is in these declines through this week that we've seen, it's been the cyclicals that have outperformed. The industrials have outperformed. Energy is green, and they've outperformed both relative and absolute, and even the material stocks have outperformed. So that tells me that people believe that, yes, this debt ceiling issue is a serious potential threat to the economy and the growth of the economy, but they believe it'll be short-lived, and it will move on, and it will start to focus on better fundamentals, not only here in the U.S., but also internationally.
Well, good stuff. Stephanie's looking for some earnings to be more important. I'm looking for technicals to be a little more important. For as long as this government shutdown lasts, I'm Dan Dicker. Thanks for The Street.